Thank you very much, and good evening, everybody. Well, following on from the financial sector, we're going to go to oil and gas, which is a very different kettle of fish. So I'm going to tell you about Coro Energy. It's a Southeast Asian-focused E&P company. We're listed on AIM. We're very small. We're virtually a micro cap at the moment, but we're looking to expand. We've done some deals into Southeast Asia. We're looking to grow a business there. So I'm going to tell you about our plans for that. And we've just finished a drilling campaign in Indonesia looking for gas, which has been very successful. I'm going to tell you a little bit about that and some of the results we've had with the drill bit. I'll tell you about some of the other things we've got in the portfolio very briefly. So we've got another block in Indonesia I'll describe, and we're trying to do some things in Malaysia, which is another country we're very focused on. And maybe just finish up with some of the things going on in Southeast Asia in oil and gas in a sort of macro sense, because it's going to be a big year, 2020. There's a lot going on over there, and you're going to see some quite big deals done, a lot of assets coming to the market, and some parallels with what we've seen in the North Sea in terms of the state of the evolution of the industry and what's going on in Southeast Asia right now. So, and some of those companies have done very well out of that. So I'll romp through the overview. Please forgive me. I hope I don't get it quick, but we are Southeast Asia, as I say. In terms of our scale, we're sub 20 million pounds in terms of market cap now, which in oil and gas terms is very, very small. Very undervalued. In fact, we'll leave some research, I think, which describes some of the assets and some of the valuation, fundamental valuation of the company. At the last set of reported results, we had about $11 million of cash in the bank. And we have two large institutional shareholders, Continental Investment Partners out of Lugano and Lombard Odier, and we have a large retail investor base. And I'll tell you a little bit about our strategy, what we're trying to achieve. So my background was as a geologist with a company called LASMO, which is a UK PLC back in the, got sold actually in the year 2000 to Eni, who's the big Italian state company. They bought it. And I eventually started a new company called Salamander Energy, which we listed in 2006, and we sold it in February 2015, just as the oil price was crashing. And that was, again, a Southeast Asian-focused vehicle. And what we learned in Salamander Energy was what works well in Southeast Asia in E&P terms isn't necessarily what works well everywhere else in the world. And one of the things that we felt was not working well in Southeast Asia was exploration. Rank wildcat exploration was a disaster story. But what worked well is here, I'm trying to show on this slide here. So what worked well for us was where we picked up fields and discoveries, hard barrels in the ground or molecules of gas in the ground that we could commercialize and develop. And if we explored next door to that field, the next door fault block or the next bump along strike, that, what we call small E exploration, was very successful. So that worked very well. And if we picked up the acreage around those fields and discoveries, then we formed a hub which we could operate and control. And we looked to build a portfolio of these hubs, of different operated hubs around the region. So these will be diversified across different basins and possibly countries. But that then, at different stages of maturity, so your mature hubs are throwing off cash flow, you're using that cash to reinvest in immature ones, and also have excess cash flows that go back to shareholders. And that becomes a self-sustaining model. And in Salamander, that works extremely well until eventually someone wants to buy the company from you, which is what happened there. So here, in Coro, we have started to put in place some of these hubs, and I'll talk about the West Natuna Basin and East Java and possibly Malaysia as being three areas that we're working on. So the first of those is in the Doyoung PSC, which is in the West Natuna Basin, offshore Indonesia. And I'm going to apologize for the naming here because it does get a little bit confusing. But the contract, the license is called Doyoung, and it's a production sharing contract or a PSC. And this is where it sits. So here's our Southeast Asian region. This is Malaysia up here. This is Malaysia, so that's where we are. And the border between Indonesia and Malaysia runs through the Natuna Sea here. We're over on the Indonesian side. We've highlighted it here. That's where the PSC sits. It's about 400 kilometers away from Singapore, which is down the bottom of the Malaysian peninsula. And you can see here in green, these are oil fields, in red are gas fields. There's lots of them there, so it's a very prolific area. In fact, this is the powerhouse for West Malaysia in the Malay Basin. And the West Natuna Basin has been a big producer for Indonesia as well. It's now quite mature. So something like 35 billion barrels has been produced out of this basin, and it's in decline. And it has a lot of infrastructure, a lot of pipelines sitting there. And of course, there you see some parallels there with the North Sea. And one of the things I'm going to talk about at the end is the companies that are leaving. The majors view this as being too mature for them, so they want to go. Someone has to take their place, which is a good story. And here we are on the geology. So this is exactly the same area. So here is the Malay Basin. Here is the West Natuna. We sit in here. And I mentioned, we have this West Natuna transport system which runs close by to our acreage and has capacity in it. And the reason we came into it is because we have this shallow gas field called Mako. So here the naming, again, it could get confusing. The Mako field. And there were several wells that penetrated this field that we knew was there. We knew gas was there. And we came into this block once the current operator, the guy we did the deal with, had drilled this well, Meiko South, this well here. And this structure, so this is a structure map, shows the outline of where all the gas sits. It's absolutely enormous. This is 350 square kilometers, which is close to the size of the area of the M25, which in oil, I don't know if you know much about oil and gas fields, but they're not normally that big. But this is very, very shallow. It's only 500 meters below the sea floor. So you don't have to drill down very far to hit gas. And so you have low pressure within the reservoir. The amount of volume that's there is 276 BCF. This is pre-drilling. And this is a competent person's report, so it's an independent verification, if you like, with an upside case of 390 BCF, which is a fairly sizable gas accumulation. And we've come in and drilled these two wells, Tambak 2 and Tambak 1. We did them in that order. And again, the Indonesians insisted we call them Tambak. That's got nothing to do with Tambak. This is on the Mako Gas Field. So just bear that in mind. I won't dwell on the seismic because I realize this isn't a technical crowd, but here is this line shows the three wells that have been drilled here. This is the discovery well, and it's this bright red event is on the seismic is the gas-bearing horizon. We drilled this well up here, which is up dip, so we hit the top of that reservoir up dip from here, and I'll show you what we found. And then we drilled this one right on the edge, Tambak 1, which is up here in the west of the field. And what's notable here is the distance between these wells. This is 13.5 kilometers, so it's a long, long, long way from the discovery. And normally when you appraise fields, you worry about what you're going to find when you drill the field that far away from where you have hard well data. Well, I'm happy to report that in this instance, Meiko South, the discovery well, this is the reservoir. It has around 7.3 meters of sand, which is the reservoir you're looking for, gas bearing. We stepped out 13.5 kilometers and found the same sand here, 10 meters, so it's slightly thicker and better developed. That was a really good result because we were concerned it could have gone silty or could have degraded. And then we drilled this one and found 25 meters of sand, so that was a big surprise, and we weren't expecting that at all. So we found exceptionally thick reservoir in this field. And we also found that same gas-water contact across the whole thing. So that big 350 square kilometer structure is effectively one big, you can think of it as one big single tank of gas. So it's very, very simple from a rock point of view. So the same pressure regime, the same pressure cell, and it means developing this field is going to be relatively straightforward. Now, what does it mean for volumes of gas and value? Well, if you recall, it was 276 BCF, but actually we think this is going to find another 100 BCF on top of that. So we think the resources here are going to go up to closer to 376 BCF, or maybe more. And we're in the process right now of getting that independently verified by a competent third party, which is a report we will publish to the market, what those numbers will be. But that's made this a very, very valuable resource. So, we found a large single tank of gas, big extent, extremely good quality reservoir, which is important. So it's very high porosity, very high permeability. It's pretty much all methane. There's no nasties in this gas. And the CPR, as I say, is underway. And what are we going to do with it? Well, here's our field. It's in the Doyoung PSC called the Mako. So this red blob is our gas field. And these red lines is a pipeline network. So we're only 14 kilometers away from the nearest tie-in point to get into the pipeline, which now, of course, has lots of space in it because this basin's so mature and production's been falling. And we are going to take it to Singapore. So we already have a heads of agreement with the gas buyer in Singapore to take the gas. We're going to prove up more volume, which we've done with this drilling, and go back to finalize the gas sales agreement with the Singaporean buyer, and then develop the field to take the gas down here. And of course, Singapore has the best gas prices in Southeast Asia. I mean, bar none. Pipe gas there is a very, very valuable commodity. So I'm going to just quickly move on to a couple of other assets. One is in East Java. This is a deal we did quite a while ago, yet to close actually, but we came into a block. Again, another gas field, stands out on seismic beautifully. When you're a very small company, you can't take much risk with your drilling. So I love these fields where you see it on site, where it all lights up on seismic. It makes it so much easier. But yeah, here we see that this is an amplitude map, and we can see very clearly where the gas sits. It's got two wells on it, one on the edge of the field, one right on the top. They've been cored and tested, flow tested beautifully. There's 360 BCF in this field, and it sits 60 kilometers off the coast of East Java. You may be familiar with Bali down here. This is where we are. This is a very industrial area of Indonesia, East Java. There's a lot of power generation, fertilizers, chemicals. There again, a big demand for gas in East Java area. I won't talk about the seismic again. It's probably not for you guys. So yeah, we are close on this one to having the gas sales agreement signed. That will be the next thing that we'll see on this project, and then you'll be in a position to start developing that gas. And this is a deal which we're only paying $8 million to get into for 42.5% of that gas field. So it's very, very cheap to buy these molecules in the ground that are quite low risk. In Malaysia, we are looking at a block which, I have to confess, doesn't fit my strategy model very well. It's a block that Petronas, the state company, have asked us to do a joint study with them on. And it's called 2A, and it sits offshore Sarawak, which is off Borneo. So it's the Malaysian part of Borneo in what's called East Malaysia. Here is the coastline. Brunei sits here, and you may know that Sarawak is here and Sabah is up there. Both are in Malaysia. And you'll see on this scattering here of red blobs, they're all gas fields. And the green ones are oil fields, as I mentioned. And you can, again, see red lines, which are pipelines going to the shore. And these gas fields are all feeding a huge LNG plant called Bintulu, which is the second largest LNG plant in the world, which sits here in Sarawak. And that is the natural market. That's the home for all this gas. So it's got something like 9 trains functioning in Bintulu right now. This is where the block sits. So all the exploration in this basin kind of started near shore, and it's moved progressively further out into deeper water. And now we're looking out here where there really hasn't been any, very, very little drilling. This doesn't fit my model of operated hubs with resources in the ground particularly well. But actually, when we started looking at it, we got very excited about it. And I'm not going to show you actual seismic from the block because we haven't got our hands on it yet, but it is of this nature. We see very large structures in quite deep water. This is almost a kilometer of water, so it's expensive drilling. And we, as a very, very small company, don't really want to put our dollars to work drilling very, very high-cost wells. But this is something we could pick up and bring in a bigger company to come and drill, because the size of the structures are such that majors would be interested in this. And so our role here is more as a facilitator to get a big guy in and come and take a ride on the drilling there. And just looking at Bintulu, this is a slide that's produced by Wood Mackenzie, who's an industry consultant, very well respected one. And they're showing the supply-demand gap in Sarawak, which is the Bintulu LNG plant. And the yellow is the demand. And what they're showing here in red is the supply from existing fields and new fields that are about to come in. And from about the year 2024, a big gap is emerging, which shows you Malaysia needs more gas coming into Bintulu. And that's the sort of gap that something like this block that we're looking at would happily fit. So I think there's a nice commercial story there. There's a very good technical story there. It doesn't really fit our, it's rank exploration and it's expensive drilling. But I think we can, if we can do something with this, and we can find a big partner to come and join us. We don't talk about the numbers, but this thing is showing, it's multi-GCF. It's just very big. You can't make it small. I've got a couple of minutes left. I'm just going to talk a little bit about what's happened in Southeast Asia, and maybe talk about what's going on with the companies there. It's an area where, as I mentioned, exploration hasn't been that successful of years, but actually this last year, we've seen 3 very notable exploration successes in Malaysia, in the basin offshore Sarawak, where we've seen a 2 to 3 TCF discovery by the Thai oil company PTT and the Kuwaitis, and Petronas itself. ENI has discovered quite a big amount of gas offshore Vietnam, which is another country we're quite interested in. And in Indonesia, which normally gets a bad rep for exploration and oil industry at large, Repsol, the Spanish, have made probably the biggest gas discovery there for about 20 years. So this year's been actually a really good year for exploration in Southeast Asia, which has kind of surprised me. But when you look at what these companies are doing in this part of the world, the sad fact is they're leaving. And they're leaving because they think this is a post-mature. So they're chasing, Brazil, Mexico, Guyana, notwithstanding the results on the heavy oil there. But that's the sort of growth they're after. And often they're going back to go fracking in the lower 48. The unconventionals, there's still a lot of shareholder pressure on the bigger companies to go home. And they view Southeast Asia very much as being a non-core. So get out, come home, spend your money on fracking. And so all these companies are leaving. And that is producing a wall of assets coming to the market. And the question is, who's going to pick them up? Well, as we saw on that last slide, a lot of Europeans, the Repsols of this world, the Spanish, the Austrians have just come in, OMV has just come into Malaysia, Perenco's a French company, ENI is the one major that's still growing strong in Southeast Asia. They're not giving up. The others are going home. And then some domestic companies, there's some Indonesians and some Malaysians, but really very, very few buyers. Some very high quality assets are coming to market, and a bit of a vacuum as to who's going to do it. Some of the national oil companies will definitely play. We're not seeing any Americans at all. So if you're looking at an asset market where your big competitors aren't here, the Americans aren't going to play. You've got more supply to the market than there are buyers. That's a fantastic recipe, and I think you really want to be an independent in amongst the deal flow in this part of the world. Just going to 2 slides to finish up. One, this is a slide from Petronas. It's not mine. Petronas are here pointing. This is part of their marketing material to show people what they have in country, and in particular the number of small discoveries that sit in Malaysian waters. So between Peninsula and Sabah and Sarawak, they have over 170 oil and gas fields that are sitting there doing nothing. They're viewed as being too small for the incumbent players. And yet, this is a large amount of resource which is sitting not being tackled. And they recognize it. So they kind of want small companies to come and operate on this stuff, which is why we're having a big push on Malaysia, is partly because this is sitting there, and that is a huge prize I mean, for someone like Coro, this needs about a dozen Coros. You know, one's not enough by any stretch. So I think, you know, what I see, it's had a good year with the exploration drill bit, ironically. We've had quite a good year with the exploration drill bit, at least with the appraising the gas fields. It's a well-developed area. This isn't new ground. You know, the industry's been here for hundreds of years. It's in that mature phase. And the international oil companies are kind of not really in amongst it, and the majors are all on their way out. So I think this is a great opportunity for small E&P. And if you look at what happened in the North Sea, some of those acquisitive companies have been the best performing stocks in the last 12 months that have been viable in the last 2 years, actually. You know, I'm thinking Serica, who I know has presented at these conferences before, fantastic story. Well, we are pretty much what Serica was, you know, 3 or 4 years ago in a completely different geography, but the characteristics are all identical. So, yeah, I mean, I like Southeast Asia. I think we're in the right place, the right time, and yeah, we're keen to get after it. Question time.
Great. James, thank you very much. Thank you.
Thank you. It sounds like all the good news, but I was wondering, the price at the moment is a bit languishing than in February, for example. So can you tell us, or are you going to bring some more good news in a few months' time?
You're talking about the oil price or the share price?
The share price.
Share prices, yeah. Share prices are, yeah, well, unfortunately I can't control those. But I think all we can do is basically do what's right for the business. So getting into assets of low risk that have high value and drilling things to create more value with that. And ultimately we believe, look, if you just keep working away at it, the value is going to come through. But certainly, yeah, if you look at any research on the company, you know, don't take our word for it, but yeah, the fundamental value is close to double where we are right now.
Is it because something to do with Italian?
Well, I don't think so. Yeah, well, we're in the process of disposing of an Italian portfolio where we had a little bit of production in the Po Valley, which didn't fit our strategy at all. And Italy, unlike Southeast Asia, Italy's very shy of exploration and production. It doesn't want any. And so getting things done in Italy is a very slow bureaucratic business. And so that wasn't going to be somewhere we're going to be investing time and money. But we've disposed of that. We're in the process of selling that, as we've announced. So, yeah, we think that's a good move for us, for sure.
A question at the back here, please, Chris.
Can you say something about your partners in the Indonesian gas project?
Yeah, in the Doyoung PSC, which is the one we've been drilling on, we have two partners. One is a small AIM-quoted company called Empyrean. The other one has got the majority of the equities owned by a private company called Conrad. So first of all, Conrad, they've done a great job. They drilled that Mako South one well. And so they took the risk, if you like, of seeing whether this reservoir could deliver in the way we thought it could, which they were proved right. They're run by guys who know the industry very, very well. I've known a long time, so I know them personally, which, you know, helps enormously. I think they've done a great job on operationally. Yeah, we're very, very happy. We get on really well with them. Empyrean, I don't know so well. They have interests, I think, in China and some things in California, I believe. But yeah, industry veterans. They're people definitely, you know, we can work with, no problem. And it's important, actually, because in Indonesia in particular, your partners can bring you down. You know, if you end up with the wrong partner, you'll be into a world of trouble before you know it. So, you know, it'll be as risky as the rocks. So with these guys, I'm actually really, really, really comfortable.
We've got a question here, please.
Would you be able to share maybe a rough range below which it becomes unprofitable for the areas in which that you are looking for gas exploration? What kind of gas prices?
Break-even prices, you mean, sort of thing?
Yeah.
Yeah. Well, the PSC regime out in Malaysia and Indonesia is actually quite favourable for companies. It has within it a sort of a vaguely self-correcting mechanism. So, you know, $60 is fine. I mean, we don't have a problem. We don't really see a commodity price issue here at all. You could go down to $50. I think once you get into the 30s, you might scratch your head a bit. But in terms of oil, gas is a different story and different contract terms. But what we find is gas markets are really strong in Asia. At the low end, the worst gas prices you'll see at about $4.50, which is rare, to be honest. And the contract terms, again, they can set them such that you will still get your rate of return, even in the worst case. So the way you make these work in terms of gas is you size your development and negotiate your gas price to get a reasonable rate of return, but then finding, when you explore on the neighbouring fault block and double your resources, stuff twice as much resource through it, of course all your unit metrics fall through the floor, so suddenly it looks brilliant. That's how these things work. But yeah, commodity prices isn't really an issue.
James, thank you very much indeed.
Okay.
Thank you for your time there now.